For all the baby boomers today and interest rates where they are, finding yield is incredibly difficult. And you have a ETF on your roster called DIVO, the Enhanced Dividend Income ETF, symbol DIVO. What is the investment thesis? What would financial advisors capture if they allocated to it in their models?
Yeah, Jay. So this is like a meat and potatoes strategy that gives you a surprisingly high amount of income. So these are essentially, it's a portfolio that's actively managed by Capital Wealth Planning. Kevin Simpson, CEO and CIO there, who I think has been on the show before. They're selecting a blue chip group of companies that are quite similar to the Dow Jones Industrial Average. These are name brand blue chip companies that pay dividends and more importantly, are growing their dividends over time. So that's kind of the basic tenet of the portfolio. And initially it's like, okay, big deal. You know, what's so special about it? Well, some of the secret sauce here is that they also have the ability to tactically write covered calls on the individual stocks in the portfolio. They don't do it all the time. Not every stock is covered. They're really trying to take advantage of pricing dislocations and market sentiment. And what that does historically is it produces a portfolio of blue chip companies that are yielding dividends plus covered call income of around 4 to 7% historically. So DIVO is the ETF that is managed by Kevin Simpson and CWP and tracks that strategy, yields just a little over 5%. You can go to our website. The one unique thing about the SEC yield is it doesn't count option income. So you'll see a lower SEC yield, but a little bit higher than a 5% distribution yield because that factors in the option income. So, you know, many advisors we talk to may own a dividend ETF that's paying maybe 2.5%, and maybe it's somewhat high quality. They take a look at DIVO and say, wait a second, this is higher quality than what I own, and it's paying maybe 2.5% more income to my clients. Boy, this is a nice way to complement my existing dividend ETF exposure. And the great thing about DIVO is it's a proven methodology. There's a long-term SMA that's 5-star rated that this ETF is based on. And lo and behold, DIVO is a 5-star rated ETF. So you can have, I think, faith in kind of the expertise of the team and the strategy, and certainly look at historical data going back about 4 years now on DIVO. So we think this is very additive, especially in an age where investors are really searching for some material income.
For podcast listeners, visit amplifyetfs.com/DIVO to learn more information about DIVO. One thing that Kevin said on my podcast last year that I thought really hit home is covered calls work when you need them the most. And so that's what's really, in addition to the yield that it produces today, something that's really helpful and unique about that product.